Welcome back to Alpha Recap, where we break down the day's market action without the fluff. Markets were closed for the day, and we're looking back at what moved stocks and why. As always, if you have questions, you can reach us at stockalpha.ai, and later we'll tell you how to submit them via the Q&A feature.
Great to be here. It was one of those rotation days, not a headline smash for the big names, but plenty happening underneath the surface. Small caps led, cyclicals lit up, and tech took a breath.
Exactly. To set the scoreboard, the S&P 500 finished up only a hair, about 0.1%. The Nasdaq 100 was up just over 0.2%. The Russell 2000, though, outperformed, finishing up about 1.33%. That divergence pretty much told the story for the session.
When small caps outperform like that, it changes the tape. You get wider participation, more names moving, and a feeling that money is rotating into cyclical and value-ish pockets rather than piling into mega-cap tech.
So what drove it? Three big themes. First, clearer policy momentum around cannabis lifted a group of small and mid-cap plays, and even some ancillary businesses. Second, a spate of deal activity and stronger demand signs in real estate and materials pushed those sectors higher. Third, regulatory headlines clipped parts of the utilities space, even as energy storage and grid modernization names did well. So it was very selective within sectors.
Let's dig into cannabis for a second, because that was the day's most talked about catalyst. Policy wins at the state level increased the perceived odds of wider legalization and improved banking access. In plain English, investors saw less legal risk and an easier path for operators to use banks, and that prompted buying across growers, retailers, and service providers.
Right. And the market punished many of those names for policy uncertainty for years. Once the political math started to swing more favorably, the rebound was pretty rapid. You also saw suppliers and ancillary businesses benefit, not just the retail-facing operators.
The other big chunk of the tape was real estate. REITs and homebuilder-linked stocks rallied on a handful of deals and clearer demand signals. It wasn't just one isolated name. Residential and commercial exposures both got bids, which suggests deal flow and balance sheet improvements were front and center despite macro caution.
Materials and mining also had a nice session. Industrial metals and specialty materials rallied on stronger commodity sentiment plus some merger chatter. Investors are pricing potential stronger demand from manufacturing and green energy projects, which would lift commodity-linked companies over time.
Meanwhile, utilities were interestingly split. Legacy utility names sold off as investors repriced regulatory and rate-based recovery risk, but companies tied to energy storage and grid upgrades outperformed. That sort of bifurcation is important. It shows investors are picking specific exposures instead of buying broad sector ETFs blindly.
Tech, by contrast, was tepid. The big tech complex finished only modestly higher. You saw some high multiple software and AI-exposed names pull back on mixed outlooks and profit-taking after recent rallies. The broader point, long-duration growth remains very sensitive to inflation and central bank messaging.
Speaking of the Fed and inflation, CPI chatter dominated the headlines. Analysts reminded the market that even though headline inflation is far off the 2022 highs, month-to-month volatility means policymakers are staying data-dependent. We didn't see the market price in an imminent pivot. This felt like a tactical rotation into reflation and cyclicals rather than a full-on risk-on market that would follow clear easing.
To break down that jargon quickly, when we say data-dependent, it means the Fed is likely to wait for consistent signs of lower inflation before changing policy. And long-duration growth stocks, the tech names many listeners own for future earnings, are more exposed to rate moves because their profits are expected farther in the future. Higher rates now, or the fear of them, can compress those valuations.
Good explanation. On cross-asset moves, crypto had a bounce. Bitcoin recovered some ground. And that gave an extra tailwind to speculative small caps and some fintech names. But the correlation was imperfect. Crypto helped sentiment, but macro concerns kept big institutional flows cautious.
Let's run through some notable corporate headlines. Goldman Sachs had a governance note. The bank's top lawyer stepped down. It wasn't a profit story, but changes in leadership at big banks tend to grab attention because investors look for signals about governance and risk oversight.
Visa filed an 8K, which got people curious. Those filings can be routine, but with payment companies, investors watch them for potential regulatory news, guidance hints, or corporate action that could affect volumes.
A few smaller caps also filed 8Ks, names like AMC Entertainment, Rhythm, and TriPoint Homes. Often those filings are routine disclosures, But in a day where small caps were leading, any deviation from expectations can produce outsized moves.
Energy and storage names were another highlight. Traditional utilities had a rough patch in places where regulatory risk increased, but firms focused on batteries, solar plus storage, and grid services did well. Investors are positioning for a multi-year capex cycle to modernize grids, and that theme is starting to influence stock selection.
Technically, the internals showed improvement. Breadth widened thanks to the Russell 2000-led rally, meaning more stocks advanced than we'd seen recently. But the major averages stayed in short-term ranges, so this looked more like rotation than a market breakout.
That's a key nuance. Rotation means money moved from leadership areas into other sectors, which increases dispersion, more winners and losers. For traders, that offers opportunities in names showing volume-backed breakouts. For investors, it argues for selective rebalancing rather than wholesale changes.
A quick reminder on technical indicators to watch. Track breadth measures like the advanced decline line and new highs to judge whether the move is broad-based. And for traders, keep an eye on SPY support and resistance levels, and watch whether QQQ can sustain strength near recent highs. If QQQ breaks down, leadership could shift back to defensive sectors.
Looking ahead, the biggest things to watch tomorrow were laid out pretty clearly. First, CPI and incoming macro prints. Even small deviations in inflation components could move multiple sectors. Second, earnings and guidance season. Any pre-announcements from consumer, materials, or industrial names matter more now because those sectors are leading. Third, follow-through in cannabis policy or further utility regulatory headlines could extend today's moves.
And fourth, filings and governance headlines from big financials can ripple through the finance sector. Fifth, technical levels. They always matter for near-term positioning. Put those together and you get an environment of selective leadership, higher dispersion, and continued Fed-driven data dependence.
So what should listeners consider doing? For traders, consider trimming names that have run without fundamental support and rotate into smaller cap and cyclically exposed names that show real volume behind their moves. For longer-term investors, use volatility as an opportunity to add to high-conviction tech holdings if fundamentals remain intact. But be selective. Favor assets with clear, real-world catalysts like grid upgrades or steady demand for materials.
Quick takeaways to leave you with. 1. The day was defined by rotation into small caps and cyclicals. Think cannabis, real estate, and materials. 2. The major indexes finished mixed, with S&P up only a hair, NASDAQ up a little more, and the Russell 2000 clearly outperforming. 3. The Fed and CPI chatter remain the central backdrop. If inflation surprises to the upside, look out for renewed pressure on long-duration growth. If it cools consistently, cyclical names get another boost. 4. Sector-level bifurcation matters. Utilities showed that splitting between legacy names and storage or grid modernization winners.
And don't forget the short-term practical point. Watch breadth and volume. If this small-cap leadership broadens into a real market advance, those indicators will confirm it. If it stays narrow, expect more volatility and stock-specific moves.
That's our recap. If you want to dive deeper on any of the themes or specific names we talked about, head to stockalpha.ai. If you have questions about anything we covered today, go to stockalpha.ai, where you can ask us directly through the Q&A feature, and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next market close with another Alpha recap. Until then, keep an eye on CPI prints and those sector headlines. They're steering the ship for now.